Hello friends, how are you? Hope you are doing great. In this video, I am going to discuss a very burning issue that is very important for the examination perspective also. That is disinvestments in India. The new government is in place and the Modi 2.0 government is very much clear that they are going to be very vigorous for increasing the efficiency of the public sector. And disinvestment is one of the way also to enhance the fiscal strength of India. And there are many more things that we will discuss as part of this video. So this topic is very important for the General Studies paper 3 and especially for the Mains 2019 and Mains 2020, because there is a topic called resource mobilization as part of the macroeconomy, and in this resource mobilization this topic becomes very important. As well as this topic becomes important because this topic actually relates to the debate of public versus the private sector. Therefore, you need to prepare this topic in a very detailed manner, and we are going to do this in this video. My name is Rahul Kumar and I'll be discussing this topic. So first of all, let me give you an outline of what will be the contents of this video. First of all, we will discuss what was the status of India's economy at the time of independence, and then we will interlink with it how the PSU's role became dominant in the face of such status. Then what were the problems which were faced by the public sector undertakings in the 1991, because of which we started the disinvestment policy. Then what is the meaning of disinvestment? What are the different categories of disinvestment? What is the purpose and objectives that are supposed to be achieved by the disinvestment? Then what is the policy of government starting from 1991 to the UPA government to the Modi government? The policy of the disinvestment has been changing, and we will see what are the different changes in the policies. Then in the budget 2016-17, the disinvestment policy was given a very new dimension, that is investment based approach. We will see what is the meaning of investment based approach. There is a new Department of Investment and Public Asset Management, which exclusively deals in the disinvestment. So we will do that. Arguments for disinvestment, that is the debate that should we go for the disinvestment or should we not go for the disinvestment. We will see this argument. Then arguments against the disinvestment, that what is the criticism of disinvestment, why experts say that disinvestment is not a good thing to do. So we will also see that. What are the different targets regarding the disinvestment, what are the actual status, then what is the role of public sector undertakings presently, how much important they are, should we still continue with the public sector undertakings or should we scrap public sector undertakings? That is also a part of our discussion. Then we will also see what should be the way forward, and we will then conclude this topic. So take some time of approximately 45 minutes to 50 minutes and watch this video very carefully. Believe me, these 45 to 50 minutes are going to be very interesting as well as full of learning. So avoid all distractions and sit at one place and watch this video, right? Okay, so first of all, what is the status of India's economy at the time of independence, right? So at the time of independence, we were having a lot of poor population, right? Our population was very poor, and at that time we knew that there are two models possible in the world. One is the capitalism model and another is the socialist model. So socialism as well as capitalism, we were aware of both. So we wanted to have the best of both. We did not adopt the capitalism as the sole model, because in India this poor population can't get everything. They don't have the purchasing power, so they can't get everything from the capitalist, from the public sector, from the private sector. At the same time, we could not also go exclusively with the socialism, because by that time the ill effects of the full socialism were started coming up. The inefficiency in the socialistic societies were prevalent. So we adopted a mixed model of capitalism plus socialism. So we adopted a mixed economy, and we gave the role to the public sector as well as the private sector, right? So we gave the role to the public sector as well as the private sector. However, if we go through the British economic history in a very detailed manner, then we will come to know that private sector was not very good during the British time. Therefore, at the time of independence, the status of private sector was quite weak. Therefore, the public sector was the only sector which could have been given the major role for the development of the economy. So one reason why we gave the predominant role to the public sector was that the private sector was very weak, and there are many more other reasons why we gave the predominant role to the private sector, to the public sector, right? So we are already aware that at the time of independence we adopted the socialistic pattern of economy, and we gave more importance to the public sector, that is the public sector undertakings. I have already told you the logic. Then we adopted the mixed economy, public plus private, and we had the centralized planning. In the centralized planning, we had certain pillars of planning, right? The pillars of planning, there are 4 important pillars, and out of the 4 important pillars, there are 2 pillars which are relevant here. One is the inclusion, right? The equity, right? That everyone in the society should get the benefit of the economic growth. And also there was a second important pillar, that is the self-reliance. So these 2 pillars indicate that we had to have very good industry. At the same time, we also have to ensure that the benefits reach to the every person on the land of the country, right? So this centralized planning ensure that the public sector as well as the private sector in the industry and elsewhere also, they were given a particular direction. So there was license permit quota raj at the because of this planning, right? Then already told you the self-reliance was the objective of the it was one of the pillar of the centralized planning. In the second 5-year plan, as per the Mahalanobis strategy, so Mahalanobis was one of the prominent economists. So he suggested that in India, since at the time of independence we had the shortage of capital goods, we were supposed to develop a good foundation of the capital goods, that goods like machinery, power sector, steel sector, these are also called the basic goods. So we were supposed to have very good presence of these type of industries, and this was possible only when we established the heavy industries, right? So to establish these heavy industries, we needed the big investment, and that was possible only through the public sector undertakings, right? So all these factors indicate that at the time of independence, it was very important to give very high role to the public sector. We will also see in the next slide that why we gave more important role to the public sector, because of more reasons. So in India, there were lots of regional inequalities. If you go to the economic history of India, then you can see that India was highly developed in the port cities like Calcutta, Bengal, Bombay, right? On the other hand, the tribal regions were very poor. The eastern regions were also comparatively poor. So these public sector undertakings were given the role to bridge the gap, to bridge the regional imbalances, because we know that if any public sector undertaking is established in any region, then it actually develops the entire infrastructure of that economy. It develops the entire in the transportation system, the power system. It gives lots of job to the people, right? So regional imbalances were supposed to be tackled by the public sector at that time. The jobs creation were also supposed to be given by the public sector, because lots of people were jobless, and we were supposed to give them the jobs. Then import substitution was also one of the policy. So the PSUs were one of the important pillar to ensure that we do not import much of the thing, because we had the very bad experience in the time of British era, that we had lots of imports coming from the outside India in the time of finished goods, and we were selling the raw material, which resulted into the economic drain from India, right? So that is also called as the drain of wealth theory, which was given by the Dadabhai Naroji and other people, right? So to ensure that the import is substituted, these PSUs were given the important role. Then the big PSUs were established under the leadership of single agency, that is the Government of India, so that all the important industries, all the important units in the industry, in the infrastructure, in the economy, they can take the coordinated decision rather than moving in here and haywire manner. They can take the decision in the coordinated manner. For this purpose, the PSUs were given the important role. And the basic industries were required. I have already told you, like steel power. And also, when we establish the big industry, for example, we establish the steel industry. So who will buy the steel? For that also we need to have big PSUs, like power sector, like railways, like similarly other infrastructure companies. So to act as a market for the already established PSUs also, we were supposed to establish the big public sector undertakings. Then these public sector undertakings were big enough to face the risk. In case of any failure, the government was there to support them through the budgetary support. The private sector was weak, as I have already told you that during the British time, the private sector was not given much of the importance. Now, because despite all these good things about the PSUs, from 1951 to 1991, these PSUs started facing various kinds of problem. There were internal lesions, there were structural lesions, and there were external lesions. Internal lesions like instability in the government. Structural lesions like high role to the bureaucracy, lots of political interference. And the external lesions like the oil shock in the global economy and many more other global factors. So because of various reasons, there was high losses incurred by the public sector undertakings in the 1991, and India has to face the BOP crisis, right? India has to face the balance of payment crisis, and India has to go to the IMF. So we will see what are the different reasons in detail. So the problems faced by the PSUs, right? The first problem was the big financial losses, and these big financial losses were coming because of the different reasons. One of the prominent reason was the issue of white elephant. So the PSUs are called the white elephant because it is said that they are poor in the project planning, and they are poor in the time and the cost management. Therefore, when they implemented the big projects, they failed to complete on time and within the cost, which resulted into the increasing cost of production and increasing prices for the public and increasing inflation, right? So increase cost of production, increase inflation, and ultimately bad impact on the economy. The economic growth became adversely impacted because of this. Now, what were the reasons why this issue of white elephant? Because the public sector undertakings were the specialized business, but the bureaucratic control was there. Journalists, for example, the IAS officers who were not trained to lead the big industries, the big technical industries, they were leading the industries because of the prevalent system that was there from the colonial time. And because these journalists didn't know how to take the decision in the best possible manner, they were, the PSUs were suffering in the form of low efficiency and no accountability, because the IAS officers and the other bureaucrats, they were the government servant, and there was very low accountability in the government structure. The people had the mindset of the British time that they didn't demand anything from the government people, right? So this generalistic bureaucratic control was one of the prominent reasons. Then there was excessive political interference in the name of public welfare. So this excessive public interference also hampered the management autonomy. So for example, if one of the power company like NTPC, they are saying that don't establish a power plant in the Raebareli, still the power plant is established over there, and that power plant gives losses. So that power plant is established on the political considerations, not on the economic considerations, not on the rational considerations. So this type of excessive political interference, so I have given the example of NTPC Unchahar. So in this type of excessive political interference hampered the good performance of the public sector undertakings. Then, as I have already told you, the job creation was one of the major objective of the PSUs, and in the lieu of providing the jobs, they hired so many people. The surplus manpower became one of the big issue. There were 2-3 people working for the same work. There were a lot of human power cost going from the coffers of the government, from the coffers of the PSUs. Therefore, this surplus manpower became the reason of increasing losses of the PSUs. Then there was social burden. The PSUs didn't have the autonomy to fix the prices of their products. For example, the BSNL didn't have the autonomy to fix the price of the telephone connection, because the PSU are supposed to meet the social objective. Therefore, on the one hand, they are competing with the private sector in terms of the prices, in terms of the customers, in terms of the productivity. On the other hand, they are bound by the government rules. So this social burden became one of the challenging tasks for the public sector undertakings. Then they were sometimes overprotected from the competition. There were certain sectors like telecom which were reserved exclusively to the public sector. So these type of industries which were exclusively reserved for the public sector, they became complacent. They started producing the poor quality of goods, and because of this, the efficiency went down. Their customer base was decreasing and ultimately resulting into the financial losses, right? So the difficulty with the public sector undertaking is that on the one hand, they are expected to perform at par with the private sector, and on the other hand, they don't have the management autonomy. So they don't have the management autonomy, and they are supposed to work at par with the private sector. So these are the problems faced by the public sector undertakings. Because of these problems faced by the public sector undertakings, we gave now a new dimension in 1991. In 1991, there were lots of losses in the public sector undertaking, lots of burden upon the government, because the government has to give the budgetary support to the public sector undertaking so that the public sector undertaking can run. So from here onwards, we started the disinvestment policy. That is, we started focusing upon transferring the ownership of the public sector undertaking to the private sector, right? So we started transferring the public sector shareholding to the private sector. So this transfer of ownership from the public to the private sector is called the disinvestment, right? So now we will see the meaning of disinvestment. So disinvestment simply means the government's action for selling or liquidating its shares holding, right? Shareholding means its ownership. So what is the meaning of shareholding? The meaning of shareholding is ownership. So government started transferring. So for example, this is the government of India. And when I say the government of India simply means the president of India, right? So ultimate owner of the shares of such companies is the president of India. So the government of India, suppose it has the shares in the public company, right? It is the shares. So these shares are sold to the non-government entity. So this non-government entity can be any private company, it can be any individual, it can be any financial institution, right? So all these all these non-government entities, when they get the share from the government, this exercise is called the disinvestment. So the investment of government is being dislodged, it is being discharged. That is why this is called disinvestment. So now I think you are clear what is the meaning of disinvestment. So now let us come back to the definition. Government's action for selling or liquidating its shareholding in a PSU in order to get the government out of the business of production. So the purpose is the government gets out of the business of production, which is the commercial work, and the government increases its presence and performance in the provision of public goods and basic public services. So because we are a socialistic economy, the main purpose should be to provide the basic goods and services to the everyone. Infrastructure, education, health. The main purpose of government is not to do the business and earn. We know that at the time of independence, it was required because of different reasons we already discussed. But it is not the main purpose. If private sector is efficient enough to take care of the production activity, then this role should be given to the private sector, not to the government sector, right? So this is the purpose of the disinvestment, right? Now there are three categories of disinvestment, right? So disinvestment के अंदर क्या होता है? I already told you. Disinvestment के अंदर क्या होता है? Simply there is a transfer of government shareholding. So government is transferring its shareholding to the non-government entity, right? Now this shareholding can be transferred in different degree, right? So it can be between 0 to 50%, it can be more than 50%, or it can be 100%, right? या तो वो 10%, 20%, 40%, 10%, 20%, 40% शेयर ट्रांसफर करेंगे, या 50% शेयर ट्रांसफर करेंगे, या 100% शेयर ट्रांसफर करेंगे. So these form the different categories of the disinvestment because they have different implication. 0 to 50% is simply called as the disinvestment. So this is the first category. More than 50%, that is normally 51%. This is called the strategic disinvestment. And 100%, that is complete sale, is called as the strategic disinvestment. So these are the three categories. The second category is, this third category is called outright sale, right? So disinvestment, strategic investment, disinvestment, and the outright sale. These are the different categories, right? Now we will see. So there are three different categories. First is the disinvestment, that is partial transfer of government equity to the private sector. Second is the strategic disinvestment, that is 51% of equity and the management control is transferred to the private sector. The best example is the Air India, right? It was initially it was considered that strategic disinvestment will be done in the Air India. However, now we are talking about outright sale, that is a 100% sale. The investment, the implication of these three categories can be different. For example, in case of disinvestment, the government is simply reducing its shareholding, however not losing its control, because the particular sector can be very, very important. For example, defense sector, for example, railway sector, for example, atomic sector. So in case of disinvestment, the control remains with the government. Second is the strategic disinvestment. In the strategic disinvestment, there are two things. One is the 51% of equity, 51% or more of the equity, and the management control. Management control means the decision making power is transferred to the private sector. So the government do not have any control over the company whose strategic disinvestment has been done, right? So government is having some shareholding but not the major shareholding, right? It is still one of the government company, but it is not under the management control of the government, right? In the third case, it is the case of outright sale. The best example is Maruti, VSNL, Videsh Sanchar Nigam Limited. So they have been sold 100%, and next is the Air India, right? Now what are the purposes of the disinvestment policy, or why we need the disinvestment? The first purpose is to infuse the professional management. When disinvestment happens, the control of the bureaucratic system becomes weak because non-government shareholders are also there and they demand the professional management. The people who have been working for 20 years, 30 years, 40 years, they will come and manage. Why the IAS officers, right? So the people who have been technically proficient, they become the CMD and they manage the operations, they take the rational decisions. So it infuses the professional management rather than the bureaucratic system, right? This is one of the first purpose of the disinvestment. Then wider ownership. When the ownership belongs to the government, the public, general public and the private sector, then people demand more accountability. They want to know what is happening inside the company. They want to know where the money is going, how the decisions are being taken. So everywhere there is transparency and the accountability. So this element of transparency becomes very, very relevant in case of disinvestment. The accountability increases. Then essential services are depoliticized. The best example is the services like telecom services. The telecom services are one of the essential services these days. Everyone requires telecom. If we interfere too much in the BSNL operation, in the MTNL operation, they will become sick, and they have become the sick. Therefore, such companies should be there should be disinvestment in such companies. So this disinvestment increases the depoliticization. It decreases the political interference. It allows the management to take the decisions as per their rational logic rather than as per the political considerations, right? The next is it enhances the financial discipline. So when there is professional management, when there is accountability, and when there is politicization, definitely the profitability increases. And with increase in the profitability, the company is no longer dependent upon the government. The subsidy burden is eliminated. The fiscal burden is reduced. So this is one of the very important purpose of the disinvestment policy, because if the government is giving budgetary support to the PSU, who is bearing the ultimate burden? You and me, the taxpayers. So this taxpayers burden is reduced because of this disinvestment. When there is disinvestment, there is professional management, and they are supposed to compete with the private sector. They perform in a better way. They produce better quality of goods and services because now they are accountable, they are transparent, they have to take the decisions in a professional manner. So they are supposed to provide the goods and services of the better quality. So that also enhances the living standard of the people. That increases the customer satisfaction, which ultimately increases the profitability. Now the next major purpose of the disinvestment policy is the giving more autonomy to the public sector undertakings, and this kind of autonomy is given through a mechanism that is called the status of Navratna, Maharatna and Miniratna. So when a company is performing very good, they are earning good profit, they are having good turnover, and they are having certain kind of presence, maybe they are listed. So in such cases, they get the Navratna, Maharatna or Miniratna status. Once they get this kind of status, they get certain investment limit. That is, they can invest without any government approval up to that particular amount. That amount can be 5,000 crore, 25,000 crore, 15,000 crore, depending upon the status. So that part I am not dealing with in detail. That part will be covered in the economics prelims lecture when we will discuss this topic. But you need to understand that this status gives them two important things. One thing is that they get the autonomy to invest up to a particular level, and second thing is that the rules of the government do not apply to their workforce. So they are comparatively more free to frame the human resource policy as per their rational, as per their economic logic rather than the public service logic, right? So these are the two major important dimensions of the autonomy that the PSUs get as a result of the Navratna, Maharatna and Miniratna status, right? So this is also one of the main purpose. And finally, experts also say that once the government exit from the business, they can actually focus upon the real things, the things which the private sector does not care, like education, health. Rather than they focusing upon the business, let them focus to the social sector. वो भाई एजुकेशन देखो, हेल्थ देखो, सैनिटेशन देखो, हाउसिंग देखो, तो वो चीज गवर्नमेंट फोकस करेगी ना. सो द गवर्नमेंट शुड फोकस अपॉन द सोशल इंफ्रास्ट्रक्चर rather than the commercial things. So these are the major purposes of the disinvestment policy, right? Now let us see the evolution of the disinvestment policy, and this evolution we can see from 1991, right? So in 1991 the first policy was introduced in 1991. From 1991 till 2000 there was a certain kind of policy. Then from 2000 to 2009 there was a certain kind of policy. From 2009 till now, that is till 2014, there was certain kind of policy. And since the time of new government, since 2014, we are having the new policy, right? So we will discuss each of these dimensions. We will discuss everything in detail, right? So first, coming to the 1991. So it was for the first time that in 1991 the government allowed up to 20% shareholding transfer from the side of public to the from the side of government to the general public. And more specifically, they allowed it to the two institutions. One is the financial institution, domestic financial institutions like LIC of India, and the mutual funds institutions who had the amount they got from the lot of citizens. So they allowed the disinvestment up to 20% only, and after some time they allowed the disinvestment to other investors also, like general public, like the banks and the employees of the PSU, right? So in this manner, this first from 1991 to 1993, 20% disinvestment in select PSUs, shares sold to the domestic financial institutions and the mutual fund institutions, and later expanded to the others. From 1998 to 2000, when Atal Bihari Vajpayee government, that is the NDA government, came, they divided the all public sector undertakings into two categories from the perspective of disinvestment. They said that they can be either strategic sector PSUs, that is those sectors which the government can't leave. So these sectors can be the defense sector, railway sector, or the atomic sector. So in these three sectors, the government will go for no disinvestment. There will be no disinvestment in the strategically important sectors. So these strategic PSUs will not be disinvested, right? The second category was the non-strategic sector. That is all the PSUs which are not in the strategic sector, they are part of the non-strategic sector. And for the non-strategic sector, there can be disinvestment in the phased manner. And in fact, they also introduced the concept of strategic sale or strategic disinvestment here only. So we have already discussed there are three categories of the disinvestment. One is the simple disinvestment, second is the strategic disinvestment, and third is the outright sale. So this second concept, strategic disinvestment, was introduced in the Atal Bihari Vajpayee government only. And they said that only in the non-strategic sector, that is the sector which are not that much important, this strategic disinvestment can happen, right? So you have to clearly understand that strategic PSUs means those PSUs which are strategically important, like defense, railway, atomic. And strategic disinvestment means when the government is transferring more than 50%, normally 51% or more of the shareholding and also the management control. So these are the difference between the strategic PSU and the strategic sale. So don't get confused. Strategic PSU and strategic sale or strategic disinvestment are completely separate things. So please be careful. Understand this concept again. You can rewind my video if you are not able to recall what I said earlier, right? And this we have seen there are lots of PSUs where strategic sale has happened, like Maruti, VSNL. After this 2000 spree in 2004, the UPA government came into existence. This UPA government came up with the common minimum program. In this common minimum program, they said that they will revive the sick PSUs, those PSUs which are not doing better, which are loss making, which are not working, which are unoperational. So they said that they will revive the sick PSUs, but they will not touch the profitable PSUs, and they will give the commercial autonomy. However, not much progress can take place. Not much progress can take place because the UPA government was in alliance with the left parties, and left parties were ideologically not aligned with the disinvestment objectives, right? In 2005, the National Investment Fund was established. In this National Investment Fund, all the proceeds of the disinvestment will go, and the 75% amount will be used for the social sector, and 25% amount from this investment fund will be used for the capitalization of the public sector undertakings only, right? So 75% for the social sector and 25% for the PSU capitalization, right? Now, for this from this National Investment Fund, after 2013, these purposes have been broadened, right? So now this National Investment Fund after 2013 can be utilized for many more purposes. So don't worry about those purposes. That thing we will discuss in the prelims lecture. That is not important for the mains lecture, right? Now, disinvestment policy, the principles from 2009. So in 2009, that is in the UPA policy 2, they brought major changes, and this policy came not as a document but as part of the presidential address in one of the parliamentary address, right? So there are some fundamental principles which are part of this disinvestment policy, right? The first principle is that the public enterprises are assets of the public, right? So ultimately, who is the owner? The owner is government. Government is owner of the public sector undertaking, and the government means basically who? The public, right? So ultimately, public is the government, right? Public is the ultimate owner. So public enterprises are the assets of the public. भाई वो public की संपत्ति है. Therefore, the public's ownership should be transferred. Their decision making ability should be increased, right? Second thing is that all the disinvestment activities, and especially this offer for sale. So in case of offer for sale, the 20% of the shares will be reserved exclusively for the retail sector, for the general public and the individuals, right? So in case of offer for sale, right? So for example, government is saying that I will sell 10% of shareholding in the ONGC, right? So government will offer out of this 10%, the 20%, that is 2%. So 20% of the 10%, that is 2% amount which it will offer to the general public and individuals. So this is the minimum basic offering that will be done to the general public, right? So general public now has a chance to broad base its ownership, right? And normally this general public gets this offer for sale at a discounted price, 5% or 10% discounted as compared to the price which is offered to the financial institutions. So this is the next principle. Now, next principle is that the government will retain majority shareholding in the strategically important sector. As I already told you, at the time of Atal Bihari Vajpayee also, it was very clearly mentioned that strategically important sector will not be divested. However, in the other cases, we can divest. So this principle has again been re-emphasized. And last is the strategic disinvestment will be happening in identified PSUs. In those PSUs which are not important, the strategic disinvestment can happen over there. In the new government, the major policy decision regarding the disinvestment was taken in the budget 2016-17. This budget 2016-17 came up with the investment based approach, right? So till now we have seen the focus is upon disinvestment. how the disinvestment will take place, how much disinvestment will be done, all those things. In 2014, when the new government came, the new government made it very clear that we are looking for making the public sector very, very efficient. And we are also looking for getting most out of our investment in the public sector. So they said that as a rational investor, we will see what we can do from our investment that we have done in the public sector undertaking. So we will manage our investment in the public sector rather than just focusing upon the disinvestment, right? So from disinvestment based approach to the investment based approach, this transformation took place in the budget 2016-17 only. And as part of this initiative only, the name of the agency, the name of the department which was handling this disinvestment was changed from the Department of Investment to the Department of Disinvestment, Department of Investment and Public Asset Management. So the government moved from disinvestment based approach to the investment based approach, and they said our sole objective is that PSUs increase their efficiency and their profit, and they will not stop only for the disinvestment. They might go for the share splitting, they might go for combining two PSUs, they might go for many more options. So they will not stick to the disinvestment. They will go how to manage the investment in the most suitable manner. The transfer of the Department of Investment to the Department of Public Asset Management, that I have already told you. And the good thing is that both the departments are under the Union Ministry of Finance, right? So don't worry, both are under the Union Ministry of Finance. Now what are the let us see. The current government is saying that we don't want to vacate from the public sector but want to enhance the efficiency, and they are having certain mantra that they want to minimize the interference, they want to allow the public sector undertaking to function on the commercial principles, and they want to grant the managerial autonomy in the decision making such as in the appointments. So they want to give maximum autonomy and ensure that public sector undertaking work in the efficient manner. Now let us see this new department. So earlier this department was Department of Investment only. Now this department is Department of Investment and the Public Asset Management, which reflects the thinking of the new government, right? So now let us see what is different over here. What is the role of this department? So this department is focusing upon efficient management of the central's investment in the equity, including its disinvestment. So this is focusing not only upon the disinvestment but majorly upon the efficient management of the investment. It is mandated to give advice to the government in matters of financial structuring of CPSUs, to attract the investment through capital markets, and addressing the issues such as the capital structuring, dividend, bonus shares. So they are trying that this public sector attract lots of capital from the market rather than sticking only to the DIPAM, sticking only to the disinvestment. Then there are certain other initiatives in the investment based approach. First is the time bound listing of the 14 PSUs. So listing basically means the public sector undertaking is now the shares of that public sector undertaking is now being sold on the stock exchange. So anyone can buy the shares, and it also increases their transparency, their accountability, because they have to submit their reports regularly with the stock exchange. So this time bound listing will actually ensure the accountability, right? And there are more than 14 CPSUs which are being there. So we will see what are those PSUs in the next slide. And the government is also promoting the Bharat 22 Exchange Traded Fund. This Exchange Traded Fund we will discuss in the separate lecture as part of the prelims. And this Bharat 22 is actually encouraging the retail investors to invest in the central public sector undertaking shares. So the principle that we heard, that 20% minimum offer will be given to the public, is actually being practiced with the help of Bharat 22 also, right? Then very recently only, in the first week of June 2019, the alternative setup has been proposed. This alternative setup is actually a new kind of setup which will comprise of selected ministers who will be empowered to decide on the timing, price and amount of the shares of the state-run company to be put on for the outright sale. So once any company has been first of all, let us see why this has been set up. What is the purpose behind the setting up of this setup? So the purpose is that the Prime Minister is very busy, and there is Cabinet Committee of Economic Affairs which decides about the disinvestment, and they don't have the time. Therefore, this body has been set up that once the Cabinet Committee of Economic Affairs gives its in principle approval for any company that okay, this company can be strategically disinvested or outright sale can be made, in that case this empowered group of ministers will take the decision regarding the timing, price and amount of shares. So it will fasten the process of disinvestment. So this alternative setup is just been proposed. So this is more about this alternative setup. So this will actually fasten the process. If we see the targets and actuals, in the financial year 17-18, the target was 72,500 crore and the actual was 1 lakh crore. The major benefit came from the purchase of HPCL shares by the ONGC. In 18-19, the target was 18,000 crore and actual was approximately 85,000 crore. In the next year, our target is 90,000 crore, right? So in the upcoming year, the target is 90,000 crore, and the certain PSUs like Rail Vikas Nigam, their IPO has been started, and there is a list of around 10 more companies which are in the process of listing, right? In the next slides, we will discuss about the arguments for disinvestment, and we have already discussed many things in this slide, in this video. Like we have discussed till here, till the DIPAM and the initiatives. From now onwards, that is the arguments for disinvestment, arguments against disinvestment, targets, role of PSUs presently, way forward. All these we will discuss in the part 2, right? So in the part 2 we will discuss these very important things. So don't miss the part 2 of the video. This part 2 will be very important from the examination perspective. They can be direct question from the part 2. So part 1 is a foundation and part 2 is actually very logical and very much relevant for the mains examination. So in the part 2 we will be covering, and apart from that we will be covering with more videos like on the strategic disinvestment. We will discuss this in detail. We will discuss the disinvestment in the part 2. We will come up with the Air India as a case study, and apart from this we will also discuss many more topics like inequality in India, irrigation sector, PPP in India. Very interesting topics. You can score more than 70% marks just by watching my lectures, and I will also be attaching the PDFs of this PPT at the bottom of these videos. So you can visit our website to get the more than 350 topics list on the GS3. So on our website there is a download section. From there you can get more than 350 topics list, and there is a comprehensive material on the few topics. You can connect with me directly by dropping a mail at writetobias.r@gmail.com. You can ask any query on this email ID, and you can surf our YouTube channel for previous year trends analysis, syllabus topics, topic wise analysis of many more important things. And you can subscribe to our GS3 course by visiting our website and watching this visiting this IAS mains courses. So this is all. Thank you very much for watching this video. Happy learning, enjoy this lecture, and watch the second part of this investment also. Thank you very much.